I'm about to break down a live trade that I caught on Wednesday. This was on EURUSD. It was again live in front of many viewers who were asking why I took the trade. I said I'd do a breakdown. I'm a man of my words, so here it is. The breakdown is about to happen. Before we get into the breakdown, I'm going to whack up the live recording on the screen in a second. It will show the transparency behind me getting in the setup, me confidently saying that I'm in the position and I believe that it's going to roll over, and then the position hit and take profit about 50 to 55 minutes later, and that's just how we do it, boys. Literally, I go live Monday to Friday and have done for the past year. Right, normally 9 a.m. UK time or 8 a.m. during London session, and I catch setups, whether they lose, whether they win. It's all documented and it's all recorded for people.
You're getting in.
So if you are interested in plugging into my lives, I will leave my TikTok in the description. Come in and say hi. I'll answer your questions. I'll help you as much as I can. But without further ado, let's get into the actual breakdown. Now, every trade I take is based on a 3-point entry system. Minimum, right? It has to have these 3 points. If it does not have these 3 points, I will not enter the position, full stop. And the first point out of the 3 is higher time frame alignment. So we're now on the daily time frame. The first thing I do when I get on the charts is scale up to the highest time frames possible. Not the highest time frame possible, but the daily, the weekly, and I assess where price is trading towards that specific day. You will be able to determine your direction based off these time frames alone. Weekly, daily, maybe 4 hour. So what I do here on the daily time frame is first understand structure. We've got a high, we've got a low. Price, if it was bullish and it was making bullish market structure, we should have came up from that low and made a new higher high. We didn't. Price actually broke down from making this low to making a lower high. Now that was quite extended. Let me do that again. From that low to that high, I did it again, but fuck it. We made a lower high. So this right here, if I mark it out for you guys and I put the text on the screen, this is what is called a lower high. So I put in capitals there for you. So we've got a lower high here, and then price went and made a new, what's it called? Lower low in here. So it's simple, guys. This is market structure 101. Daily time frame, keep it stupid simple, lower low, boom, there we go. Now we've got bearish market structure forming, lower highs, lower lows, and all we've done now is based on this in here is create a mitigation and a potential new lower high, which is this fair value gap in here where we tapped the 50%. We tapped the 50% of this daily area of volume, fair value gap. It all means the same thing. And price reacted quite heavily, sweeping these highs, tapping into that area. Further, continuing our bias on what we think is going to happen next, which number 1, bare minimum is coming for that low. And number 2 is coming for, right, a complete new lower low here on the daily time frame. So that's what we've done. We've now created this sort of bearish market sentiment in here where we're expecting price to fold and come and sweep these lows in here, the sell side liquidity. All I have to do now, knowing that I am trading towards the downside, is scale in, scale down the time frames and figure out exactly where I'm going to take my entry for the day. Now let's drop to the 1 hour time frame next. Before I get into the second point in my 3-step entry confirmation, I will continue marking out the bias, which is now on the 1 hour time frame, this immediate low in here. So I'm not going for the ultra low. This immediate low is the target. This looks very appealing. Prices come all the way down this low. There's no way it reacts back to the upside without sweeping this low in here. Price isn't going to react from this level and then go towards the upside without coming down and sweeping the final low in here. So I knew that we would dip in a little bit further. And before we dipped, I just had to find my entry, right? Before we went and actually grabbed that low in there. And that was based off of another pullback in here on the 1 hour time frame. So if I actually mark out using the Fibonacci tool from this high in here to the new low that we've created, what lines up perfectly with the fair value gap? The Fibonacci, right? The Fibonacci lines up perfectly with the 78.6 and even the 61.8 level. So we're expecting a nice pullback here on the 1 hour time frame. You could have entered alone, and a lot of my guys within my mentorship, because they work jobs, because they work 9 to 5s, they enter based off 1 hour time frame, 15 minute, 30 minute, because they haven't got as much time to be able to monitor charts on the lower time frames, like the 3 minute, like the 5 minute, and that's completely cool. I tell them to do that, in fact, because you don't need precise entries, guys. You do not need to get that sniper wick entry. You could have entered based off of this alone. There's enough confirmation. Your stops above the high, right? Let's say above these bodies in here, and you would have been chilling, right? 1 to 2 risk to reward is what I trade. So a nice 1 to 2. It's not even at that low, right? 1 to 2 in there, and you would have been chilling, right? Sweet. But what I personally did is I waited for price number 1 to come into that area and show a reaction. I didn't want price to inverse. So if I play out the next hourly candle, you can see us actually come in and react from that level. Now, this leads me on to point 2, which is a simple liquidity sweep. Play price out. London session has now kick-started. We're building up some more liquidity, and that is a key thing to note. Price, if we would have swept the liquidity before breaking towards our area of interest to sell, it maybe would have put me off this setup. But the fact that we generated all this liquidity in here, the lows weren't swept. In fact, we built up liquidity. It showed me that we are looking to sweep buy side before actually coming for the sell side. We've got the liquidity sweep, which by the way was step 2, the liquidity sweep. Price came up, it mitigated the area. By mitigating the area, it liquidity sweeped our high. So we actually ran a high, tapped into our area and rejected, and closed very nicely after that. The third step is an inversion fair value gap or a change of character. Inversion fair value gap is more of an aggressive entry, but it was valid in this scenario. Otherwise, I would like to wait for a change of character. A change of character on this setup would have looked like this low being broken in here. Now, if this low gets broken, more time is probably just going to continue rolling over too aggressively. I don't want to miss the move. So therefore, I want to get in previous to actually this breaking and changing character. So what I did was I played price out a little bit more. You can see us start to fail to make a new high. And this is where I entered the position. You would have seen the live recording earlier, but we didn't come up and make a new high. We made a lower high in here. All right, lower high in here, and we created what is called a fair value gap. So this fair value gap in there was an area in which if price was to come up and completely smash through the 1 hour area in here and run the highs again, it should have from that area. Okay, it should have from that zone. And the fact that we aggressively inversed it with a strong body closure. A strong body closure is how I classify a valid inversion fair value gap. If we wicked it and closed back above, i.e. in these levels, I wouldn't have been interested in selling. But the fact that we body closed beneath the fair value gap showed me that we disrespected it. And my entry protocol is aggressive based off of inversions. It's entering off of the closure. And stops were literally about, I believe it was 6 pips or whatever it is. You can go and check the live recording. It was around 6 pips at the highs, just in case it wanted to come into that 1 hour area again and mitigate it one more time. And we was targeting, as always, guys, a 1 to 2 risk to reward. I trade a fixed 2-2-2 system. I risk 2% every trade and I target a 2 risk to reward. I don't deviate from that unless I'm trading my scalping strategy on gold. But this is exactly what we was looking at, and we was just looking at it targeting, lo and behold, the low, but for a 1 to 2 risk to reward. So we got in, I believe we waited for a little pullback. Entry was something like this. And yeah, 6 pip stop loss. Here we go. If I play price out a little bit more, you can see us absolutely break down. Boom, and run the lows. No coincidence. We ran the lows, and then what did we do after running the lows? We reversed because we know exactly where to place our take profit. So as soon as we ran the lows, we came back up all the way to, well, entry levels. It did eventually continue rolling over massively, but, you know, we was already out of the trade. A lot of my guys who were in this trade were also out, and news kickstarted, and this fell another God knows how many pips. These setups are reoccurring. They happen day in, day out in the markets. I only trade euro and pound for this specific strategy, and it's super consistent. You don't need any other pairs. You don't need to be getting in multiple positions a day, and you certainly do not need to be going for high risk to rewards when you've got a win rate of 60 to 70%. A 2R is consistent. My 222 methodology works, and I've been doing it for over a year on live. Now, I'm going to be hosting a free webinar, more so breaking down exactly how to become profitable if you're stuck still and stagnant in your trading right now. I will link it in the description. Go ahead, go and apply. I'm going to be breaking down and holding back nothing. My full strategy, the 222 system, the exact 3-step process that I put all my guys through to become profitable, and how you can get from A to Z, i.e. being unprofitable and stuck in the markets, to Z being a full-time funded trader.